7 weeks after the House of Representatives finished its own work on the 4 tax reform bills, the Senate has done same. From Wednesday, May 7 to Thursday, May 8, work on the 4 tax reform bills took center stage at the Senate. At the end, the Senate largely toed the same line with the Green Chamber. Highlights include rate of VAT remains at 7.5%, sharing formula for VAT, 10% to the federal government, 55% to the state governments, and 35% to the local governments. And 2% of all revenue, both oil and non-oil, as cost of collection for the Federal Inland Revenue Service. We will serve you highlights of the 2-day sessions of the Senate in the Red Chamber.
I stand to present the summarized report on the Nigerian Tax Reform Bills 2025. I am Mohammed Sani Musa, representing Niger East Senatorial District. I move the motion that today the Senate do consider the bills on the Nigerian Revenue Service Establishment Bill 2025 SB 584 and the Nigerian Tax Administration Bill 2025 SB 585. I so move, sir. Report of the Senate Committee on Finance on the Nigerian Tax Reform Bills 2025. The Senate at its plenary on Thursday, 28 November 2024, read for the second time the 4 bills presented by Mr. President, His Excellency Bola Ahmed Tinubu, GCFR, and referred same to the Committee on Finance for further legislative actions. The background of the bill is that Nigerian tax reform bills is aimed to modernize the country's tax framework in line with global best practices, enhance revenue generation, and improve ease of compliance. The reforms are driven by the need to address structural inefficiencies, broaden the tax base, and align fiscal policies with economic realities. Anchored on international reporting standards such as the Organization of Economic Cooperation and Development, OECD, base erosion and profit shifting framework, the International Monetary Fund, tax policy recommendations, and the World Bank Ease of Paying Taxes Index, these bills seek to streamline tax administration, reduce leakages, and promote transparency. Key reforms include digitalization of tax system, rationalization of multiple taxation, and the introduction of incentives to boost investment. These legislative changes are part of the broadened fiscal strategy to improve tax to GDP ratio, reduce over-reliance on oil revenue, and create a more competitive business environment. The reform also align with Finance Act enacted since 2019, ensuring a progressive tax system and that fosters economic growth while meeting global compliance standards. The 4 bills are the Joint Revenue Board Bill 2025, SB 583, the Nigerian Revenue Services Establishment Bill 2025, SB 584, the Nigerian Tax Administration Bill 2025, SB 585, and the Nigerian Tax Bill 2025, SB 586. All the members attended the committee public hearing and the committee retreat, which took us about 5 days. And based on that, we engaged consultants who have also worked on these reform bills, and also added to it all the affected acts and subsidiary legislations, which you can see at 40 in page 6, from capital gain tax to Casino Act case, company income taxes, personal income taxes, industrial development income taxes, stamp duties, value-added tax, venture capital, petroleum profit, customs and excise, NIDA, National Lottery, Third Fund, Oil and Gas, Petroleum Industry Act 2021, the Nigerian Startup Act, the company's income tax, etc., and the presidential orders of Mr. President were all duly studied, considered, and acted upon. Highlights of the tax reform bills: there are the Joint Revenue Board Bill, which the objectives was to enhance coordination, harmonization, optimization of revenue collection, reduction of revenue leakages, elimination of overlapping tax jurisdiction, capacity building, and transparency. The Nigerian Revenue Service Establishment Bill was also to improve revenue collection efficiency, enhance taxpayer compliance, combating tax evasion and corruption, increase national revenue, creating more predictable and stable revenue environment, promoting fiscal sustainability. The Nigerian Tax Administration Bill objective was for simplification and consolidation, enhance efficiency through digitalization, strengthening taxpayer rights and obligations, and improve revenue mobilization. The methodology was interaction with various stakeholders, which I have highlighted earlier. We invited so many at the public hearing, almost about 64 organizations, CSOs attended, and this bill was widely circulated among all these stakeholders. VAT rates, we decided to maintain the 7.5% as proposed by the Senate Committee, Senate Health Committee. We decided to maintain that. The excise duty, which of course had created a lot of issues, we considered it that since Nigeria is a signatory to so many customs treaties, what we did for clause 157 of the Nigerian tax bill, we introduced taxes, duties on service charges. We assigned the collection to the Nigerian Revenue Service. This will now give the customs their rights of collecting excise duties. But the collection of service charges, service levies, and surcharges will be done by the Nigerian Revenue Service. The Petroleum Industry Act, some of the sections of that act have been taken, and the importing with physical provisions into the Nigerian tax bill. The administration of royalty under the PIA, Petroleum Profit Tax, PPT, and Deep Offshore Island Basin Production Sharing Contracts is now under the administrative jurisdiction of the proposed Nigerian Revenue Service. It is important to note that this does not affect the entire provisions of the PIA, as other provisions remain valid and extant. The recommendation of the Joint Revenue Board Establishment Bill 2025, SB 583, the new insertion in Class 25 is as follows. The Tax Appeal Tribunal shall be funded through the Consolidated Revenue Fund, as may be appropriated by the National Assembly towards the execution of its functions. The changes in Clause 26 provide clearer, more structured, and professional qualification standard for tax appeal commissioners, promoting efficiency and credibility in tax disputes. Clause 30, jurisdiction of the tribunal. The Act expands the tribunal jurisdiction to cover all federal and state tax laws, and to amend to restrict only to tax disputes and not controversies. The committee amended Clause 31. Tax appeal commissioners shall be paid salaries and allowances to be determined by the Revenue Mobilization, Allocation, and Fiscal Commission. Committee also recommended Clause 44, that is to create the office of the Tax Ombudsman, who shall be funded from the Consolidated Revenue Fund, as may be appropriated by the National Assembly. This is being done into providing funds for operations. The committee to also recommend 3% to be approved as the service cost of collection for the Nigerian Revenue Services. The committee amended Clause 51 as follows, except as otherwise. I go back to the 3% because before it was 4%, which does not include the oil, was non-oil revenue. But with the amendment that has been done, so the committee amended 51, except otherwise provided under this act. Any other law or any enabling agreement or arrangement as otherwise authorized by the board of or the executive secretary, any person who discloses institutional information, communication, document, or internal conviction he is going to be subjected to conviction or a fine to the tune of 5 million. Recommendation on revenue service. The objective of the bill should be amended, which we did, to provide for legal, institutional, and regulatory framework for the administration of taxes and revenue accruable to government of the Federation as prescribed by the National Assembly. What we did, we amended clause 5. Functions of the revenue service should be amended as follows. Assessed persons, including corporations, companies, and individuals, be in collaboration with the relevant ministries and agencies, subject to the approval of the Senate, review the tax regimes and promote use of taxation to develop, stimulate the growth of economic activities. Adopt measures to identify, trace, freeze, confiscate, or seize proceeds derived from tax fraud and evasion in line with the provisions of this bill and in line with international best practices. Clause 7 of the Revenue Service Act should be amended also. We seek to amend the chairman of the board we seek to amend that there should be a chairman of the board who shall be either the president or someone appointed by the president. So we now deliberated at our closed session, and we all agreed that we should have Mr. President to appoint a chairman for the board who is a non-executive chairman. And then there will be executive vice chairman who shall be the head of the revenue and subject to the confirmation of the Senate. Clause 13.2 of the Nigerian Revenue Service Establishment Bill 2025 should be amended also, that the secretary shall be a lawyer or a chartered accountant or a chartered secretary who shall not be less than the rank of a deputy director. The executive directors should be appointed by the president to the board. We propose that the relevant clause should be amended, that the president shall appoint executive directors for the service, each representing a geopolitical zone on rotational basis among the states in the zone, alphabetically or otherwise, depending on what Senate has agreed. And an executive director shall not come from the same states. That is the executive chairman and an executive director who will be heading one of the directorates. The timeline of reporting was also reduced from 6 to 3 months after the end of the year. Recommendation on the tax administration bill, which is one of the areas that have generated a lot of controversies. We have addressed that, and what we did with that recommendation is that the federal government will be taking 10% from the VAT distribution. We did not amend the present VAT structure. We left it at 7.5% instead of increasing it as was recommended. So in that structure, we said 10% of that collection will be for the federal government, 55% of that collection will go to the state government and the Federal Capital Territory, and 35% to the local governments. The amount of VAT revenue standing in the credit of states and local governments shall be distributed among them on the following basis. We recommended that A, state governments will have 1, equality, which will carry 50% of that, population carry 20% with that, and place of consumption carry 30%. This is something that we deliberated with stakeholders, with the Forum of Subnational Governments, that's the Forum of Governors. We have discussed this with ulamas and everyone, and we agreed. The only area that we also felt is necessary to address was how the local government's own will be shared. And on the local government, we said they share it among the local governments on equality, and then on their population, 30%. And we stop there. Then we now change the word derivation to the place of consumption, which is the best, because every VAT is a product of consumption. So we now said derivation to be replaced with consumption, place of consumption, to provide clarity. And we also provide for penalties for the following offenses, which are like clause 100, failure to register. If anybody failed to register for VAT, when you're supposed to have services and pay those VATs, they said 100, you will see it is there in the bill. All the clauses that have been touched. Another area is in the Nigerian Tax Bill 586. The recommendation we made is on the development levy. We retain the funding of TED Fund, NASENI, NIDA, and NEL Fund, and also we now brought the cyber security. Because today, if you see how people are losing their money through the use of technology, we felt it's necessary to bring this to fore. And what we did with the development levy is that the tertiary education fund will now have 50%. The Nigerian Education Loan Fund will have 15%. National Information Technology Development Fund will have 10%. National Agency for Science and Engineering Infrastructure will have 10%. National Cyber Security Funds will have 5%. And defense security, because we felt it necessary that the security of this country cannot be compromised. And hence, with the wisdom of Mr. President, we felt it's necessary to include defense security funds for 10%. We retained the VAT at 7.5. Company income tax, we didn't reduce it, and we didn't increase it. We left it at 30%. Clause 157 to 16, which provide for excise duty, which I have said earlier, we have deleted it. The provisions of BIA remained. They are excellent laws. So those areas that we deleted, I have mentioned. That the Senate, thereby having carefully considered the above, the committee hereby recommends as follows, that the Senate do consider, pass the following bills: Joint Revenue Board Establishment Bill 2025, Nigerian Revenue Service Establishment Bill 2025, Nigerian Tax Administration Bill 2025, Nigerian Tax Bill 2025. In conclusion, the committee wish to thank Mr. President of the Senate and Chairman of the National Assembly. We also want to thank the leadership of the Senate, members of the committee, and all the senators for all the contributions they have made. For the first time, this committee had a retreat with over 62 senators in attendance. And all the days, we have never had anything less than 46 sitting. That shows you the importance of this. We thank the staffs of the Secretariat who worked assiduously to ensure the timely completion of this report. I so submit, Mr. President.
On both days, it all began with the committee of the whole House, followed by plenary. At both sessions, Senate President, distinguished Senator Godswill Akpabio, presided.
I want to say that I'm happy with the processes that we have taken. And this is, like I said, we are doing this for Nigeria. Some of these laws date back to 1901, before 1950, some before 1960, and they were never reviewed. And some have become very anachronistic. The Stamp Duties Act, some of them were in the 1930s. So now that we are bringing this, harmonizing them, reviewing them to meet with modern realities, I believe strongly that Nigerians should be happy that yes, they have a very responsible Senate, they have a responsible National Assembly. Even as we proceed today, if there are still any areas, we will set up a conference committee to meet with the House of Representatives and then ensure that everything is smoothing before we present to Mr. President for assent.
Thereafter followed clause-by-clause consideration of the bills. Work began with consideration of the report of the Committee on the Nigerian Tax Administration Bill.
Clauses 1 to 10. Any objection? Well, do you have any objection in clauses 1 to 5? Anybody? Those in support of clauses 1 to 5 say aye. Those against say nay. The ayes have it. Clauses 6 to 10. Those in support of 6 to 10 say aye. Those against say nay. The ayes have it. Clauses 11 to 20. Those in support of clauses 11 to 20 say aye. Those against say nay. The ayes have it. Clauses 21 clauses 21 to 30. Now, distinguished Senator Tambua.
I have an observation on clause 22, fund of the service. There is established for the service a fund which has consist of and to which shall be credited A, 3% of the total revenue collected by the service which may be appropriated by the National Assembly subject to review as the economic situation may require. Mr. President, I have concern about appropriation being may. We shall appropriate these funds. It's not may, Mr. President, I so observe.
Ola Solomon Olamilekan arise to second the motion as moved by Senator Aminu Tambo. I so second.
That particular clause, is it clause 22A? 2A.
Determined by the National Assembly of the total revenue collected by the service, which shall be appropriated by the National Assembly for capital and recurrent expenditure of the service.
Okay, as may be.
Yes.
Determined by the National Assembly of the total revenue collected by the service, which shall.
Yeah, shall.
Because the operative word in contention is may, which shall be appropriated by the National Assembly for the capital and recurrent expenditures of the service.
In the draft bill submitted by the Finance Committee to the Senate, 3% cost of collection was proposed for the FIRS. This came up for discussion at plenary, and at the end of it all, the cost of collection was reduced to 2% of total revenue, both oil and non-oil. It was further decided that the Senate shall appropriate the cost of collection.
What you have there is now, the new recommendation is 22A in the middle. 3% of the total revenue collected by the service, which here it says may be appropriated, but we are changing it to shall be appropriated by the National Assembly, subject to review as the economic situation may require. 3% may be reviewed from time to time, depending on the economic situation of the country. But the appropriation shall become, it doesn't matter what percentage, whether it is reviewed to 1, whether it is reviewed to 2 or reviewed to 5, but whatever is reviewed shall be appropriated by the National Assembly. Those in support?
The same item A, mine is on the percentage. 1% is the most acceptable and implementable or implemented. Excuse me, I have the floor. Would you listen to me to the end? What I was saying, Mr. President, is that 1% is the international accepted.
No, sorry, we are not redrafting the bill. we are all, is that 3% of the total revenue collected by the service, which we have now corrected to shall, which shall be appropriated by the National Assembly, because here what they had was may. In other words, they can spend the 3% without appropriation. But we are now saying shall. Shall is compulsory. Which shall be appropriated by the National Assembly, subject to the review of the percentage from time to time, depending on the economic situation
But oil is inclusive here. Since oil is inclusive, 2%. 2% instead of...
Okay. Though you are, this Senator Wadada, Senate Standing Orders, 2023 as amended, open to Order 84-2. Open to 84-2. And please read.
The chairman may at any time during the discussion of a proposed amendment withdraw it from the consideration of the committee if in his opinion the discussion shall have shown that the amendment violates the provisions of this rule. So then we must...
So what it means is that on the 3%, and so no further amendment can be carried out.
So why are you changing may to shall? That's it. That's it. Yeah.
I am changing shall to and moving may because I was here before you. So I'm more conversant with the subject matter. And then if you wish to proceed further than where the rule tells you, come by way of motion, so that we will debate it here and then we will agree. So your objection is ruled out of order. Of the total revenue collected by the service shall be appropriated by the National Assembly.
I am not on the may or shall order, words. The same, on the same section, but what I have is, I will want us to invoke section 1B of our standing orders of the Senate 2023 as amended.
Read section 1B.
Now 1B. He says, in all cases not provided for in this standing order or by seasonal or other orders or practice of the Senate shall by resolution regulate its procedures. And by this, I am calling on the President to allow me propose an amendment from 3% to 2% because the subject matter is all encompassing. It involves both oil and non-oil revenue. And what will be accrued to the coffers will be more than the budget of 15, 16, 17 states of the Federation. So for that, let's reduce it to 2%.
Any seconder?
Brother Senator Odada, I so second.
In favor that we utilize the section 1B of our standing rules in order to allow for amendment of the proposal here, say aye. Those against say nay. The ayes have it. The second leg is that the motion has been proposed and seconded, that we review the percentage from 3% to 2% in view of the fact that the entirety of the revenue are now consolidated, both oil and non-oil. Those in support that we review from 3% to 2% say aye. Aye. Those against say nay. The ayes have it. So we now look at clauses 31 to 41. A bill for an act to provide for the assessment of collection of and accounting for revenue accruing to the Federation, the federal government, the states and local governments, and thereafter prescribe the powers and functions of tax authorities and for related matters, SB 585. So Nigeria Tax Administration Bill 2025, SB 585. We have looked through. So clauses 1 to 15. Yes. Let's start with Senator Tamua.
Prescribe the powers and functions of tax authorities and for related matters, SB 585. Mr. President, I have a very serious concern, particularly when you go deeper into the provisions of this particular bill at clauses 87 downwards, where it is clearly intended that we make laws for states and local governments. This is against the Constitution. We don't have powers to make laws for states and local governments. So we may, Mr. President, go into this and look at it more dispassionately.
What section tells you that we don't have powers to make laws for states and local governments? Because what I know legally, by the Constitution, is that any law that is enacted by a state or a bylaw by the local government, which is inconsistent with an act of parliament at the national level, is null and void to the extent of that inconsistency.
They make laws for states. That's why you have state houses of assembly.
No, we do. We do.
Legislation for Nigeria, which includes the subnationals. So I'm not sure whether, I don't know the problem that Senator Tambo has on this part, in regard to this particular aspect. Also, you recall that we sat here and do ICPC and do EFCC, and the state was not comfortable, and they took this matter to court. And the Supreme Court said, no, the National Assembly has powers to do laws, regardless of the subnationals. So I think we're comfortable here, unless there are other legal minds that will say constitutionally we cannot, but the court, the Supreme Court said we can, and I think we should.
The ranking legal mind, from my head alone, I know that we can make laws that will bind the states and local governments. If there are areas we cannot, the Constitution will separate those areas. But on areas of, there are exceptions. On areas of concurrent jurisdiction.
With respect to what Senator Tabua has said, the powers of the National Assembly are stated in the second schedule, part 1, exclusive legislative list. And subsection 59 says we have powers to make laws for taxation of incomes, profits, capital gains, except otherwise prescribed by this Constitution. We need to understand that what we are doing here is a bill for taxation. If we go to the latter part of the bill, in fact, we debated it, as Senator Nigi said, where we were trying to create state revenue services. We said we couldn't do so, but we expunged those sections and kept the one that deals with taxation, administration of taxation, which is what this bill deals with. So, with respect to Senator Tabua, I think it's wrong to say that we don't have the powers. Thank you very much.
The administration of the pay-as-to-earn system also came up for robust discussion.
Shall be paid all revenues collected by the government of the Federation, except the proceeds from the personal income tax of the personnel of the armed forces of the Federation, the Nigerian Police Force, the Ministry of Foreign Affairs, or Department of Government charged with the responsibility for foreign affairs, and the residents of the Federal Capital Territory. So, Mr. President, the exception on this is that we cannot make law for the collection of revenue on these categories of taxes. Residents of the FCT, we cannot make law for the collection of taxes mentioned in this section because they belong to FCT. And even pay as you earn, we cannot make law for the collection of pay as you earn. It's entirely the responsibility of the State Internal Revenue Service. Thank you.
Thank you. That does not need argument.
At the committee level, which is to the effect that a provision be clearly made to authorize the payment of tax revenues, payee and any other taxable revenue for oil company workers who are working in various sections of the creeks in oil facilities scattered across various parts of the country. Because currently, the position is that those taxable revenues are calculated every month and paid to the state that houses the headquarters. And we agreed. And that's why I've been running up and down, conferring with my distinguished chairman of this committee. So may we have clearer direction, Mr. President, as to where that provision or clause is. Because I can't find it. And if it is not there, then this is an opportunity for us to insert it after section 36, so that we can put a clause that in the case of computation of oil, the taxes deductible and payable by all sector workers operating outside their headquarters, that those tax revenues be computed and paid to the states where the facilities are domiciled. So I seek that clarification, Mr. President.
We can't make two sets of laws on pay as you earn. There are people working in FCT, but they live in Nasarawa State. There are people who work in Lagos, Mr. President, and they live in Ogun State. The logic of pay as you earn, my brother, is that you pay based on your residence, not where your office is, because it is in your residence that your family, your children will attend public schools and any of those services provided by state government. The purpose of tax is to address the social needs of human beings. And so, if you tamper with this, I'm saying the basis for taxation is based on your residence. And there are good reasons for it. You spend 8 hours at work, you spend 16 hours outside work. Oftentimes, your children attend schools where you are resident. That is where you drink your water. That is where you benefit from all kinds of social facilities that state governments or federal governments are supposed to provide. So, my dear brother, I understand your concern, I understand your pain, that somebody flies to somewhere, make money, work there, and then you fly to another place. Unfortunately, we can't make two laws, one for oil workers and one for other non-oil workers. Your place of residence is the basis for taxation, and it is the state in which you reside that collects the money.
The Senate also roundly rejected clauses in the bill seeking to create revenue boards for the states and therefore deleted clauses 87 to 98.
87 is talking about establishment of the State Internal Revenue Service. 89 up to clause 93, whether we can establish state internal revenue services for states with their functions, with their management, structures for state revenue services. Can we, under the Constitution, Mr. Chairman, I have my concern?
We cannot. And we can only do so when they have crisis. But right now, they don't have crisis. By Section 11 of the Constitution, it gives us the power to take over the functions of the houses or assemblies where they are unable to do so. But right now, we don't have that situation. So we cannot make a law here for closing the ability of the houses. So the entirety of those provisions that allow the National Assembly to make to create state revenue service, those provisions are hereby expunged. 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 And so please, Senator Tambua, move a motion and mention the areas that should be expunged.
Mr. That it will be superfluous for us to pass these provisions as contained in clauses 87, 88, 89, 90, 91, 92, 93, 94, 95, 96, 97, 98, 99, and 99. I hereby move that all of these be expunged from the bill.
Any seconder? We are, in terms of correction, it should be 98, because I think Section 99 is about creation of executive chairman.
Yes. Okay, yes, Excellency.
Which we have to discuss.
Yes, Excellency.
So the motion has been moved and seconded that we expunge from clauses 87 all the way to clause 98. Those in support that those areas be expunged, say aye. Those against say nay. The ayes have it. So 87 to 98 hereby expunged. Now let's look at clause 99.
Wherever we see executive chairman from section 99 and onward should be changed to executive vice chairman.
Thank you. Distinguished colleagues, the section 99 has been amended to, instead of executive chairman, it says executive vice chairman mutatis mutandis. Those in support that we proceed with we approve section 99 as amended, say aye. Those against say nay. The ayes have it.
On value-added tax,
section 100.
Mr. President, my distinguished colleagues, we have defined what VAT is. We said VAT is a consumption tax. And we all agreed that VAT will be shared based on consumption. So I want to move a motion here because it's something that the even Forum of Governors agreed on this. I want to move a motion for the purposes of distributing VAT revenue among the states. Place of consumption means the location of the consumer at the point of consumption and not supply. That is what is in the interpretation.
The motion say aye. Those against say nay. The ayes have it. So we change it from point of supply to point of consumption. The Senate for painstakingly going through this clause by clause to ensure that what we pass is left for posterity to enjoy and to avoid conflict in lawmaking. I want to also state clearly that if there is any provision that we have missed out, it will be corrected by the judiciary if anybody challenges it. We can't do both the work of the judiciary and the work of the legislature. Just to call attention to my parting words, It is the work of Parliament to enact laws. It is the work of the judiciary to interpret the laws. So let us not sit down here after we have finished enacting a clause or enacting the law. We now try to interpret it. Then we are taking over the job of the judiciary. So I want to thank you for the approval, and I want the Senate leader to now move that we revert to plenary to report progress.
From the Committee of the Whole House, the Senate moved to plenary.
Consider the report of the Committee on Finance on the Nigeria Tax Administration Bill 2025 and approve as follows. Long title as recommended. Number of clauses 1 to 79 as recommended. 80 to 81 as recommended. As amended, rather. 80 to 81 as amended. 82 to 86 as recommended. 87 to 98 as deleted. 99 as amended. Clauses 100 to 146 as recommended. Clause 147 as deleted. Clause 148 as recommended. Interpretation clause 149 as recommended. Short title clause 150 as recommended. Schedules 1 to 5 as recommended. Is this a true reflection of what transpired in the Committee of the Whole?
The annual tax conference is back, bigger and better. The Chartered Institute of Taxation of Nigeria invites you to be a part of its 27th annual tax conference, starting from May 12th to 16th, 2025, at the Abuja Chambers for Commerce and Industry. This year's theme is focused on taxation for development, policies, law, and implementation. For 5 impactful days bringing together experts and stakeholders in the industry, we'll get to explore critical sub-themes including tax laws and administration, challenges of compliance, tax reforms, and expectations of subnationals tax practice in Nigeria, balancing professionalism and ethics tax and stakeholders' expectations, accountability, transparency, and sustainability. The conference promises to be an enriching event, offering intellectually stimulating sessions, groundbreaking information, and liaison. You also get to enjoy social activities like the Hospitality Evening, where districts showcase their cultural prowess, games and sports, and networking dinner at the Gala Night. For more information and to register, please visit www.citnevents.org/events.
Distinguished colleagues, we go to the second bill. The Senate, in the Committee of the Whole, considered the report of the Committee on Finance on the Nigeria Revenue Service Establishment Bill 2025 and approved as follows. Long title as recommended. Clauses 1 to 21 as recommended. Clause 22 as amended. Clauses 23 to 30 as recommended. Clause 31 as amended. Clauses 32 to 38 as recommended. Clause 39 as amended. Clause 41 as recommended. Interpretation clause 42 as recommended. Short title clause 43 as recommended. Schedules 1 to 3 as recommended. Is this a true reflection of what transpired in the Committee of the Whole? Leader of the Senate. Distinguished colleagues, a bill for an act to repeal the Federal Inland Revenue Services Establishment Act number 13 of 2007 and enact the Nigeria Revenue Service Establishment Act to establish the Nigeria Revenue Service charged with powers of assessment, collection of, and accounting for revenue accruing to the government of the Federation and for related matters 2025, third reading taken. Distinguished colleagues, a bill for an act to provide for the assessment, collection of, and accounting for revenue accruing to the Federal Republic of Nigeria, the states and local governments prescribe the powers and functions of tax authorities and for related matters, third reading taken. Distinguished colleagues, a bill for an act to repeal the Federal Inland Revenue Service Establishment Act number 13, 2007, and then enact the Nigeria Revenue Service Establishment Act to establish the Nigeria Revenue Service charged with the powers of assessment, collection of, and accounting for revenue accruing to the government of the Federation and for related matters 2025, third reading taken and passed. Distinguished colleagues, a bill for an act to provide for the assessment, collection of, and accounting for revenue accruing to the Federation, federal, states, and local governments, prescribe the powers and functions of tax authorities, and for related matters 2025, third reading taken and passed. Let me thank the chairman and members of the Finance Committee and related committees, including the consultants and also the elders special committee of the Senate and all distinguished senators that worked on these two bills that have now passed third reading. And also pray that these bills will revolutionize tax collection distribution in Nigeria. I thank your patriotic zeal and determination that from morning till past 5 in the evening, you have sacrificed so much to ensure that you dot the I's and cross the T's and amend where necessary to have a document that can withstand the test of time and work for the whole Nigeria. Today, you have dispelled rumors that these tax reform bills were meant to save any section of Nigeria or any group of persons. You have shown that these tax reform bills are actually meant for the collective good of all Nigerians to reform our tax administration, tax collection, tax distribution, and add value to governance in Nigeria. So I thank all of you, and I pray that God Almighty will take you back safely and protect you. Can we say amen?
On day 2, proceedings took the same form, and the business of the day was the consideration of two bills, Nigeria Tax Bill and Joint Revenue Board Bill. Next step is for the Conference Committee, which has been set up by the National Assembly, to harmonize the decision of both houses before transmission to Mr. President for assent. Be sure we'll keep you posted.